Dick, what are some of the risk advantages to a market-free annuity?
Well, Eric, it's protecting the principal and protecting the gains along the way, which is really different than what folks are used to. They're used to their IRA or their 401k up and down with the market. And they find it hard to believe, really, that they can actually have growth, reasonable rates of return, see interest added to their account, and not take these risks.
Yeah, so you've got your choices a lot of times either in a fixed account or you're looking at an index account that will pattern the market, and I say pattern,
yes,
because you're going to get participation in the growth of those indexed gains, but you have no risk of going backwards. So you've offloaded the risk from yourself. The insurance company's then taking the risk on the investment side. So you're completely market free.
Well, exactly. And one of the ways in a securities portfolio that folks tend to structure that is they'll use some bonds. Again, folks don't realize that there's really risk in bonds.
Well, and it's typically tied to the interest rate environment.
Exactly. There's the inverse relationship of interest rates, where when interest rates fall, bond prices values rise, and vice versa. And so
by selecting an annuity, you're actually removing the bond risk because the insurance company is taking on that portion.
Well, that's exactly right, Eric, and it really appeals to folks that they get rid of not only the securities risk from stocks, but also from bonds, and transfer that risk over to a third party.
Yeah. The other nice thing is you don't have to worry about living too long. I know that sounds strange, but it's when you have a lifetime income guarantee, and that's what annuities are really, the core component of them is having that lifetime income guarantee, so you don't have to worry about outliving your money.
Well, and you can't stress that enough because folks are living longer today.
Don't worry about outliving your money.
It is so true. That we don't know how long we're going to live, and whether you have a very high net worth or a modest net worth, it's still the same concern.
Yes.
Will I outlive my money with my standard of living?
Right. How long can I be comfortable for to maintain what I need to each and every day?
Right.
So that's what.
And so from a risk point of view, again, it gives you a guarantee for as long as you live throughout retirement. Another thing that we want to talk about on the risk aspect is that these market-free annuities are guaranteed by the claims-paying ability of the companies.
Right.
And there's a lot of third-party rating agencies that you can follow to know the strength of that company.
Yeah, and we could go into a lot of detail about the reserve requirements of the insurance companies and how they're fiscally sound.
Very safe.
But we should always emphasize they're not FDIC insured. We don't want to have that confusion. But that being said, they're so well reserved for in the requirements that they have to uphold just to make sure that they have the claims paying ability that they do. Very safe, very sound.
Exactly, and this is what insurance companies do. They manage risk.